what does this all mean? Where do our markets stand now, and why are analysts so worried?
South Africa enjoyed a decent run the last year, up about 13.5% for the last 12 months. It's certainly not the best in the world. That honor belongs to Greece, up 36%, and certainly not the worst. Brazil is down 15%. But market analysts are worried that our PE levels, our market valuation, are too high. But our PE ratio, according to Bloomberg, is 17.5, which is not far higher than what the global average of 16.7 is. So I'm not really concerned about that. If you want to look at huge PE levels, that honors belong to Greece, Portugal, Spain and Ireland, where the PE levels range between 66 and 250. That's very, very expensive. Yet these countries enjoyed incredible returns over the last 12 months, all north of 20%. On the other hand, if we look at the cheapest countries, cheapest markets, then we find China with a PE of 10.7, Hong Kong 9.2 and Russia 5.8. But their returns have been in the single digits up or even down. China, for instance, is now officially in a bear market, down 20% from their peak in March. So if I were in these countries, I would certainly be a bit worried about local politics or some other national issue. So, despite our labor issues and a fear that the loss of Madiba magic may trigger some form of riots, South Africa is actually in Goldilocks territory. Not too hot, not too cold. Enough issues to climb the wall of worry, but certainly no imminent danger that the world would come to an end or any crisis of any sort. And I see the same pattern in the world markets. Yes, there are fears of QE ending and China slowing down, but these are issues. We are certainly not crisis events, and they're certainly not contagious.